Hi, welcome to Financial Charger with William, a place to learn how to supercharge your finances. Let's talk about REITs. What are they and how to invest in them? What are REITs? How REITs work? What a REIT ETF is? What are the different types of REITs? What are the benefits of REIT investing? What are the potential drawbacks of REIT investing? Let's get started. Help the channel out with the YouTube algorithm. Go ahead and hit that like button and subscribe. What are REITs? Real estate investment trusts allow individuals to invest in large-scale income-producing real estate. A REIT is a company that owns and typically operates income-producing real estate or related assets. These may include office buildings, shopping malls, apartments, hotels, resorts, self-storage facilities, warehouses, and mortgages or loans. Unlike other real estate companies, a REIT does not develop real estate properties to resell them. Instead, a REIT buys and develops properties primarily to operate them as part of its own investment portfolio. How does a REIT work? A REIT is required to meet certain standards set by the IRS, including that they return a minimum of 90% of taxable income in the form of a shareholder dividend each year. This is a big draw for investors that are interested in REITs. Invest at least 75% of total assets in real estate or cash. Receive at least 75% of gross income from real estate, such as property rents, interest on mortgages, finance, and real property, or from sales of a real estate. Have a minimum of 100 shareholders after the first year of existence. Have no more than 50% of shares held by 5 or fewer individuals during the first half of the taxable year. REITs do not have to pay tax at a corporate level, which allows them to finance real estate more cheaply than non-REITs companies can. This means that over time, REITs can grow bigger and pay out more dividends. What is a REIT ETF? A REIT ETF offers diversification and reduced portfolio risk by investing assets into many different REITs. Think of a collection of REITs that you invest in. What are the different types of REITs? REITs types by investing holdings. Equity REITs is the majority of REITs that are publicly traded equity REITs. Equity REITs own or operate income-producing real estate. MREITs. MREITs, also known as mortgage REITs, provide financing for income-produced real estate by purchasing mortgages and mortgage-backed securities and earning from the interest on these investments. REITs types by trading status. Public non-listed REITs. Public non-listed REITs are also called PNLRSs, are registered with the SEC but do not trade on the national stock exchanges. Private REITs. Private REITs are offerings that are exempt from SEC registration, and those shares do not trade on national stock exchanges either. Join M1 Finance with my link and we both get free $30 for stocks. Risk of REITs. REITs are traded on the stock market, which means they have risks similar to equity investments. Real estate prices rise and fall very often in response to outside stimuli. REITs, in return, require this weakness and mirror the effects of the prices. Benefits of REIT investment. Zero corporation tax. We talked about this earlier. High dividend yields. Since REITs are required to pay at least 90% of taxable income to shareholders, they tend to have above average dividend yields. It's not uncommon for a REIT to have perfect safe dividend yields of 5% or more. A total return potential. REITs have the potential for capital appreciation as the value of their underlying assets grow. Access to commercial real estate. Portfolio diversification. Most experts would agree that diversifying your investment portfolio is a good thing. Although REITs are technically stocks, real estate is a different asset class than equities. Liquidity. One of the reasons investors shy away from real estate is that it is known as being liquidity. Properties can take a long time to sell or be purchased. Investing in a REITs is always to eliminate the liquidity risk, as shareholders are bought and sold on the U.S. stock exchange every day. Do you invest in REITs? Let me know in the comments below. Potential drawbacks of REITs investing. Dividend taxation. REITs tend to have above average dividends and aren't taxed at a corporate level. The downside is that a REIT's dividends generally do not meet the IRS definition of qualified REITs, which are taxed at a lower rate than ordinary income is. Interest rate sensitivity. REITs can have a high sensitivity to interest rates. The key point is that rising interest rates are bad for REIT stock prices. Long-term investment. Plan for long-term investments. Generally, REITs are better suited for long-term investments, which can typically be thought as those of over 5 years. REITs performance. REITs recover pickup speed as REITs add to their already strong 2021 gain with another 6.2% average on total return in April alone. REITs outperform the Nasdaq's 5.4%, the SP 500 5.34%, and the Dow Jones average of 2.75%. So as you see, REITs are a great investment. What are examples of REITs and their info? Pandec Ventures Mortgage REIT Income ETF, or MORT. And here's some information about it. Performance over 1 year, 100.4%. Expense ratio, 0.40%. Annual dividend yield, 6.90%. 3 months average daily value, 183,676. Assets under management, 300.5 million. iShare Mortgage Real Estate ETF, REM. Performance over 1 year, 80.6%. Expense ratio, 0.48%. Annual dividend yield, 6.12%. 3 months average daily volume, 712,594. Assets under management, 1.6 billion. IQ US Real Estate Small Cap ETF, ROOF, Roof. Performance over 1 year, 60.8%. Expense ratio, 0.70%. Annual dividend yield, 3.2%. 3 month average daily volume, 8,181. Assets under management, $51.4 million. Do you like these 3 examples? Let me know in the comments below. In future videos, I could add more examples. Go ahead and hit that like button and subscribe. Are REITs ETFs a good investment? REITs ETFs provide more attractive dividends than bonds. Moreover, they offer investors instant diversification by holding a basket of REITs to reduce portfolio risk. Are REITs better than buying ETFs? Investors who buy REITs are buying an individual real estate investment trust. However, investors who buy REIT ETFs buy a portfolio of REITs, giving them instant diversification. What are the most popular REIT ETF providers? The most popular REIT ETFs are provided by Vanguard, Fidelity, Schwab, iShare, Vescore, State Street Global Investors, UBS, and WisdomTree. As you've seen, REITs come in a wide variety of types and specifications. All REITs present a majority opportunity for many investors. The chance to add real estate to investing portfolio in a form of managed fund without the hassle and expense of direct ownership. Check out the links below in the video description to help out the channel. We will see what is about to happen. Thanks, and have a good one.